Hi, I think it wouldn't be appropriate to not talk about how the world has changed from the pandemic. It really has. As investors, it is important to notice these changes and not just bury our heads in the sand and think the world will go back to complete normal. There is no such thing as normal, and the only thing we can rely on is that change will always happen. In this crazy world, the only thing that is constant is change. I butchered that quote, but I think someone famous said something like that before. If you are new here to my channel, well, welcome, and don't forget to subscribe so you can keep up to date with my videos. I'm trying to help as many people as possible understand what they are actually investing in. Most people spend more time researching their next computer, their next phone, than they do their next investment. Now, I've built a reasonable sized investment portfolio that I'm aiming to continue growing at 20% per year. I base a lot of my knowledge on the great investors. We're talking Peter Lynch, Warren Buffett, Charlie Munger, Hamish, and a handful of others. Okay, now let's jump into the changes that have happened because of the pandemic. The pandemic accelerated the work from home trend. Interestingly, the reason why many companies previously shied away from remote work was because of productivity concerns. But this theory was crushed during the pandemic, as employees were actually more productive at home. The US Labor Department reported that second quarter productivity was 10.6%. and third quarter productivity came in at 4.6%. Both are historic productivity gains. And as a result, the work from home trend isn't going away anytime soon. In fact, Upwork recently released a report that projects 36.2 million Americans will work remotely by 2025. That's an 87% increase from pre-pandemic levels. The report also noted that 1 in 4 Americans would continue to work from home in 2021. It will provide further opportunity in a number of sectors. For example, residential building and construction will remain strong in not only the US, but most of the world. Home improvement businesses will also do well, such as Home Depot, because if you're working from home, you'll be trying to make your new work environment as nice as possible or large. Businesses have worked out that they don't need large office spaces anymore and can save a fortune by getting workers to work from home. And this work from home has been enabled by video conferencing and smart software that allows groups of workers to work remotely and efficiently. Many companies will increase profitability due to this, and many workers will enjoy not having to commute. I think going back to the office is not something that will be embraced by employees or employers. This is really a good win-win for everyone involved. By the time the pandemic is over, our lives will have been changed forever, and some of us may choose, will probably be told, to work at least some of our time at home. And now this brings us to shopping from home. Key investments for this theme will be Microsoft, Alphabet, Apple, Zoom, ServiceNow, Viva, DocuSign, Amazon, Shopify, Atlassian, Salesforce, Adobe, as well as many others. While these companies are fairly obvious, there are others who also benefit from this trend, such as Wi-Fi providers, cloud storage companies, telcos, semiconductor companies. Actually, pretty much everything in the tech sector are going to be winners in this new world. However, the flip side is there is bad news for a whole range of companies. Firstly, commercial real estate like office buildings will just continue to suffer. As companies downsize their office space, they'll leave many commercial real estate investment trusts in really bad shape. Also, with the pandemic changing the way we live our lives, we also don't visit the shops as much as we did. So like shopping malls are not looking good either. And retail businesses that survive just due to foot traffic, oh, that's going to be tough. If these retail businesses don't have a strong online presence, they're probably going to disappear. Retail real estate is going to be in for a tough time, and I can't see this trend turning around. But if we're talking about real estate, the future is going to be in distribution centers for online retail business. So think industrial land and warehouse businesses. The good locations and facilities will do really well, in my opinion. Travel, both domestically and internationally, well, when it returns, will be made that little bit harder, as we will probably have to show some sort of vaccination card. I can't imagine the virus will just disappear completely, as I suspect it will linger in poorer countries for years. Most likely being vaccinated yearly will be necessary if you want to travel. My thoughts are going to be that international travel is going to take a lot longer to get back into the full 2019 levels, as people will still be a little worried. I don't have a lot of confidence in any travel-related companies, even the booking platforms like Airbnb, Booking Holdings, or Expedia. Look, I could be wrong here, and there might be a lot of pent-up demand for travel, and maybe it bounces back really hard. Look, time will tell. I'm putting this in just the too hard basket for now. Just remember, all of this is just my opinion, by the way. So look, I guess I'm just speculating. There have also been a lot of investors getting excited about investing in biotechs and pharmaceutical companies that are involved with vaccines. So companies like AstraZeneca, Pfizer, Moderna, Novavax. Well, the problem is that in 12 months from now, there will be a whole lot more companies involved in vaccines. Which one will be the best? I have no idea. It's true that the virus may be here to stay, but who will make money from the vaccine and who's going to come out on top? I don't think anybody knows at this early stage. If you really want to get exposure to this space, my best solution would be to invest in an ETF like the iShares Nasdaq Biotechnology ETF, IBB is the ticker, which holds most of the vaccine makers and is listed in the US. But it's probably not going to be as big of a money spinner as we think, as governments will definitely try to make this very affordable. Look, I'm just not jumping on this train. Okay, before I do this segment, we have to rule out prices for now. And just think about the main beneficiaries of this new world. I'm not recommending buying any of these companies at current prices. Most people have jumped on these companies without any care for the price at all, which could lead to serious disappointment. But look, just for fun, what would it look like, this perfect portfolio? To capitalize on the working from home theme, these are the companies that will benefit. Microsoft, Alphabet, Apple, Zoom, ServiceNow, Viva, Amazon, Atlassian, Dropbox, Salesforce, Adobe, DocuSign. These are pretty obvious ones. Now, to capitalize on the home improvement, renovating, and home office theme, I think Home Depot and Amazon here. To capitalize on the shopping from home trend, we've got Amazon, eBay, Shopify, Visa, MasterCard, and PayPal. And to capitalize on the vaccine, I think the iShares Nasdaq Biotechnology ETF. Now, to capitalize on the cheaper home entertainment movement, you've got Netflix, Tencent, Electronic Arts, Activision Blizzard, Nintendo, Alphabet, which has YouTube, and Amazon, which has Prime Video. So if you notice, in most of these areas, there are a few companies that will benefit in multiple ways. With Google Drive, Docs, Sheets, Gmail, plus all the other things that help work from home, their core business of search will continue to be a necessity of our lives, and YouTube for entertainment and knowledge. Growth just continues worldwide, as it seems no one can challenge them. With now $130 billion in net cash and free cash flow each year exceeding $31 billion, there's only one company that could even come close, and that's Apple, and they aren't really in the same business. Alphabet is an aggressive acquirer of tech businesses as well that could either be future rivals or can enhance their own core business. To use the Warren Buffett fundamental of the business moat or competitive advantage, well, Alphabet's couldn't be wider. Amazon's retail delivery business continues to expand and includes food, since it took over Whole Foods. They will continue to be a direct beneficiary as people are stuck at home. When things get back to normal, I expect that people's shopping habits may have changed to be buying more online permanently. Amazon's data business, AWS, is still leading the market and continues to grow rapidly. And long-term growth is set to continue at almost 35% per annum. That's nuts. Surely the law of large numbers will get Amazon at some stage. But right now, this is the company at the top of my list if I could just make sure I wasn't overpaying and shooting myself in the foot. Check out my wish list video where I go through my prices that I would like to buy Alphabet and Amazon shares. I am revising Amazon higher again to $2,750, which I hope I can get sometime in 2021. Now, there are a lot of other businesses that will benefit from the new world conditions and lots that will decline and disappear. Businesses that I like a lot are businesses that provide the tools to the big winners. These are called the pick and shovel businesses. In the gold rush era, like 150 years ago, everyone was chasing gold, but the real money was made by the people selling the picks and shovels to the people looking for the gold. So I really like companies like Skyworks, Nvidia, MasterCard, Visa, and PayPal that make sure these other companies can deliver their products and services. So these are all on my radar as well. Yes, as you have seen, I am very bullish on tech, but not crazy to just rush out and buy at whatever price. I'll wait for something to reach the level that I want so I can get my margin of safety. As Warren Buffett, Charlie Munger, Seth Klarman, and Phil Town would all say, margin of safety is everything. In my next video, I'll be diving into Zoom for those looking for more of an in-depth analysis. Now, don't forget to subscribe so you don't miss my future videos, and I will see you then.